You are asking us a lot about should I go for 15 years or 30 years mortgage commitment? Matt today is going to explain the difference between those two.
Mhm.
Okay, and if you are new to our channel, my name is Joanna. I'm a local realtor.
And I'm Matthew Mettinger. I'm a lender in the state of Illinois.
Okay, so we have the 15 years versus 30
Mhm.
years mortgage. Like, can you talk a little bit more about it? It's like, I think that the most important difference is obviously the years, right? But what else?
Sure, sure. So, and a lot of people don't know there's actually a 30, 25, 20, 15, 10. We go down as low as 10. So there's a lot of options. The most common is the 30 and 15, and there's a reason for that. So when you look at a 20, 25, 30, the interest rates are the same. There may be exceptions, but on the whole, 99% of the time, you'll pay the same interest rate. So most people mentally will say, well, why will I take a 20 at the same rate as a 30? I can have a lower payment and then pay more if I want to. So at least I have the option. So let's go with the 30. When you get to the 15, you do see some improvement. There's no hard and fast rule, but I would say generally half a point. Half a point. It used to be to three quarters at some points, depending on the market. So you definitely will have some savings, but you'll have that higher payment. So, you may look at the 30-year payment and say, well, this 15 is going to be another $500 a month or something like that, which is just too much sometimes for people. So it's really a good way to kind of break it out is look at both, say, can we comfortably afford this? Are we okay with this? Is it worth saving this money? If you have a very stable job, things are good, your debt to income ratio is low, this isn't really a tough mortgage for you to pay. I will tell people, hey, do jump on the 15 year. You might as well because you will save a lot of money. Because just think of 15 years worth of interest on a mortgage. That's a substantial amount of money, and you're paying a lower interest rate as well. So not only are you shortening the term and not paying interest for 15 of those years, you're also lowering the interest you're paying on that first 15 years. So usually it comes out to hundreds of thousands of dollars in savings. So if you can afford it, I say it's a great option. You just want to make sure you don't put yourself in a position where it's tough to pay the mortgage and you have to worry. Because like I said, you can always do a 30-year and make larger payments, which, again, if you're a little bit tighter, that's nice because then one month you could say, you know what, I'm going to take that 500. I need that. The dog has to go to the vet and, he swallowed something or whatever it is. You have that extra leeway in there. But it's an excellent option. Like I said, there's adjustable rate mortgages, which run, on 15, 30-year, those kind of things. And those have a little bit more to them, but there's a lot of different types. And I love to just kind of go through if people aren't looking for that standard 30-year, we can kind of dive into the other options you have, because it's limitless. We're even rolling out multiple years. So, a 29-year or 28, I heard are on the horizon. So we'll have some other options as well. That way, if you're refinancing, you can jump, you've had your house 2 years, you can just
Mhm.
go right back to your same schedule. You didn't add any years to the payment, you're not putting 2 more years back on that mortgage. And then you don't have to jump to say the 25 because you want that same payment just with a lower rate. So there's a lot of options out there, a lot of different ways we can make it work.
Yeah, and then like you said, we don't talk about this a lot because I don't think
Mhm.
media is like explaining that in details. It's like I feel like we
Yeah.
you really have to be in a position to talk about the mortgage, right? When you are actually
Mhm.
buying a real estate, to know and ask those questions. And then
Yeah.
also piggybacking on the stuff you said about maybe getting a 30-year mortgage and then just paying a little bit extra to principal
Mhm.
each month, sorry. There are, like, I've noticed, like with different banks right now, mortgage banks, once you guys close on the property, you will be probably redirected to like a portal or something for the
Mhm.
mortgage bank, right? And then honestly, like, there's a lot of those that will have like calculator embedded in this portal, when you can
Yeah.
actually see, like, okay, if I pay $100 more into principal, how much money I'm gonna save in the long run.
Mhm.
What if I pay extra 500? And it's amazing to see that what Matt just said,
Yeah.
like, you may be paying $2,000 a year, $2,000 a month, sorry, for the mortgage. If you pay that extra 200 or 150 dollars, that's gonna like be an extra payment a year.
Mhm.
That usually can take you down to like, I I calculated this once. long time ago. I think you can shred like 7 years of your mortgage
I was just
with
gonna say,
just
yeah,
paying, right? With just paying
it could
that
be
extra
7, 8
little.
years. Yeah, it can vary depending on obviously what you're paying and all that. But it makes a huge difference because people don't realize you're knocking down the amount that the interest is being charged on, which has a dramatic effect long term and shortens, that one extra payment a year, like you said, can take years off the mortgage.
Right. So just remember, like, if you decide to, like, if you're listening to us and you already have the mortgage, check that calculator, but make sure if you pay some extra money each month, it's not going to go towards the interest. It goes towards the principal of your mortgage. So that's extremely important because I've seen people mixing those two. So you want to make sure that you are adding that money to principal, so the principal is getting lower, so you pay less interest rate on the whole
Mhm.
principal amount.
Yeah.
So so that's great. That's great. And
Mhm.
thank you so much for explaining. And I'm super excited about the 28 years that you mentioned, because in my head, every single time I refinance, it's like, oh, I'm starting again, and
Yeah.
again.
Yeah.
So I just like pay this off, but it's still a new loan. So that's gonna be interesting to see how that's gonna play out. All right. Well, thank you so much for listening to us, and we see you next time.
Have a great week.
Bye. Thank you. Bye.